Good afternoon, everybody. Welcome to our Moving Markets podcast. It is Thursday, May the 1st, 2025. Welcome to the month of May. Whoops, I screamed past that. There we go. Lawyers say I got to leave that on there for at least a couple of seconds so that everybody sees that, but I double-clicked by accident. But anyway, market's been open for just about a half an hour. Off to a good start this morning. After yesterday, I'm getting used to being back on in the mornings now instead of in the afternoon. So it's the next day that I get to talk about what's going on, and I guess what's kind of weird that I'm getting used to is not talking about what happened during that day right after it happened or close to the time after it happened. So, yesterday, major turnaround by the markets. I mean, everything started out yesterday looking kind of ugly. And then by the end of the day, it had all turned around. We got that GDP number that really freaked people out. And I mentioned on yesterday morning's podcast that I thought it was a pretty big overreaction to what was, shouldn't have been a surprise to people. That's kind of what I was saying, is it should not have been a big surprise, and yet it was. It seemed to catch everybody off guard. And so, by the end of the day, the NASDAQ was pretty much flat. The Dow was up, the S&P was up, and now it's being followed by a really good day today. A lot of today's movement is because of what the reports were with Microsoft and Meta after the close last night. Those two companies respectively. You've got Microsoft up 8, almost 9%, $35 to the upside, and you've got Meta, I believe, was doing about the same thing, something like, not as big a percentage gain on Meta, but more than enough gain, up 26%. And you can see on the one-day chart here, just in those first 30 minutes, Meta started a lot higher, has dipped a little bit. I think that's early profit taking off the initial jump. I think by the end of the day, Meta will probably finish towards that spot where it opened. That's my prediction. I avoid making a lot of predictions, but that is in fact what I'm predicting, is that by the end of the day, Meta will be there. So those two companies largely responsible for what's going on in the overall market. As you can see, a little over 30 minutes in right now, the Dow up 190 points. It was up 220, 230. The NASDAQ still up over 282. It's been up 320, 330, 340. I think 30 minutes in, you are seeing a little bit of morning profit taking, a few people taking advantage of those, a few day traders taking advantage of those early gains. You never know what's going to happen by the end of the day. Yesterday we started low, we ended high. We could be starting with everything looking like roses today, and truthfully, by the end of the day, everything could be negative. You never know. We're in that type of a very, very volatile market. I think the thing that may have been overlooked a little bit yesterday, in the big picture, I think what got overlooked was the mineral deal getting signed between the U.S. and Ukraine. And, Donald Trump, for a number of weeks now, for over a month, since that famous blow-up meeting in the White House with Trump and Zelensky, he's been hammering on Ukraine and on Russia that they both need to be more realistic about what they want out of a peace deal. And Trump has maintained that this mineral deal getting done is going to be a first big step. And it finally got done yesterday, much to the chagrin of his critics and the people that would actually, root for him to fail. I think that was big. And I think that did have an effect on what happened by the end of the day. The other thing too that I heard, I don't know that I'm smart enough to have picked this out on my own, partially because I on the GDP I didn't dig into the underlying numbers, but one of the reasons I think things turned around is because as people looked more closely at those GDP numbers, they looked at how much business investment is being injected into the market, and it kind of put to rest this notion that we're for sure going to go into a recession. Now, we had a quarter that contracted. There is no guarantee that we don't have a second quarter in a row that contracts, and that is by definition a recession. So there's no guarantee that that doesn't happen. But all of the business investment that has gone on, I think, is going to make it difficult for there to be a second. Well, maybe that's not the right way to frame it. I think it takes away completely this notion that a recession is a foregone conclusion. Is there still a chance of it? Of course there is. Do the numbers yesterday with business investment in any way guarantee that there won't be a recession? Of course they don't. I'm not myopic enough to think that that's the case. But I think it speaks a lot to this idea that right now with a 0.3% contraction, remember, it wasn't like a big massive contraction, with a 0.3% contraction, this idea that there's some kind of foregone conclusion that there will be a recession is gone completely for anybody who's being rational and being smart about things. So I think that was the big news yesterday that may have gotten overlooked a little bit. This morning, I think as most people kind of expected would be the case, bear with me as I refresh these a little bit, as I think most people suspected was going to be the case this morning, the unemployment numbers, the new claims, new unemployment claims, continuing claims, they all came in worse than expected. The expectations were not all that great to begin with, and then the numbers themselves came in worse than the expectation was. That's the wrong page that I was looking to pull up. And as a result of that, you've got, this is one of those cases where I thought this would have given a bigger boost to the market. Futures were already up because of earnings reports from last night. I thought this would have given a much bigger boost to the market simply because, if for no other reason, simply because this increases the probability of a rate cut from the Fed coming sooner than later. The expectation, the previous month got revised from 222 to 223. That's a very, very small revision. The consensus estimate was 221. It came in at 241. But here's the biggest thing that changed from my perspective. The revision on the 4-week moving average jumped way up, and the actual number for this month came in higher than the 4-week average. So it's a trend that would suggest that rate cuts are coming sooner rather than later. And that's the type of thing that the markets typically react very favorably to. So I thought you would have got a little more of a boost to the markets from this news. It didn't change things much for this meeting that takes place next week. It's still, the markets are betting 92% that the rates stay the same. I think it would be a pretty big shock to everyone, me included, if that ended up not being the case. But this has jumped up now to over 70% that there will be a rate cut in the next meeting in the middle of June. That's just basically 6 weeks after this May meeting. So it's going to be interesting. And I am in this camp. I am in this 65% camp that thinks there will be a rate cut coming in the June meeting. And I think it's, no matter how political Jerome Powell is, and he is political, whatever he says about not, pretending not to be political, he is very political. He does not like Donald Trump, and the feeling is mutual. Donald Trump does not like him. But in spite of that, I think this is accurate. I think Powell and company are going to have to give a rate cut because, you had yesterday this little, what I see as kind of a hiccup in the inflation data. Remember, we got the PCE numbers. Where is it? Right there, PCE, and this came in just fractionally more than what the consensus was. But I think that largely got overlooked by the end of the day. The year over year was in line, and the month over month core was better than expected. It was the non-core number that was a little bit hot. But notice this month over month number was down pretty good from what the prior was, and the prior got revised down a little bit. I think that PCE report, it was being pitched yesterday as inflation getting hotter, but it was not. It was inflation was actually coming down from where it was the previous month. It was just a little bit more than what the expectation was, and that kind of got overlooked and misreported as inflation coming in hot. It really wasn't. Inflation is curbing, albeit very, very slowly, and with the job market slowing, that is absolutely unequivocally a reason why the Fed should be cutting rates. So I'm you know I'm in that camp that believes I don't think a surprise should be a shock. It will be a surprise if they cut next week, but I don't think it should be completely shocking with the most recent data. But to not get a cut the following report, I think would be a shock and should be a shock. Okay, let's talk about our trades. Johnson & Johnson, this company is just, I'm at the level now where there's no other way to describe it except that Johnson & Johnson is pissing me off, and it's pissing me off big time. And I hope that language doesn't offend anybody. I know compared to what you hear a lot, that's not super harsh language, but I hope no one is really bothered by that. I'm ticked at I cannot see a logical reason why something like this is happening. You have these 3 days in a row where it's moving up. It goes up over 150, 750. And then all of a sudden today, for what I see as no explainable reason whatsoever, in the midst of everything else in the market, with only a couple of exceptions, moving up, Johnson & Johnson is moving down. And it just makes no sense. It's like that 5-day moving average, the 20-day moving average. For some reason, no one with big money that has the ability to actually move the price of this stock wants those moving averages to cross over right there. And so the likelihood is that unless there is a big turnaround today, a big turnaround, we are going to have to roll Johnson & Johnson out again. The difference is, in this case, what I'm going to do for tomorrow morning is probably roll the call side of Johnson & Johnson out, move it out another week, and leave it right at the 152.50, 157.50 strikes. That would be right in there, because I do think the stock will remain in this range between a long call and short call strike, hopefully move above our short call strike. But I'm going to take the put side of the trade and simply roll it to see if we can't get 10, 15, 20 cents by rolling the short put straight up to a strike price higher than where the long put is, turn it into a bull put spread just for tomorrow, not to next week. So what it will look like is if these were the two legs of our call side of the trade, we'll just leave them at the same strikes, move them out 1 week. If these were the two legs of the put side of the trade, we're just going to take this one and roll it up above this one for tomorrow's expiration. I'm not going to do that during the day today, because already Johnson & Johnson is well off of its low for the day. And look at what it did yesterday. Yesterday, it opened way up here. It moved all the way down here. And then by the end of the day, finished halfway between. I'm not convinced that Johnson & Johnson couldn't reverse course and finish to the upside today. We're early in the trading day. We're not even a full 45 minutes into trading today. It absolutely could happen. So I'm not going to do anything with that right now. So leave Johnson & Johnson where it's at for today. We'll see what happens, and then we'll make an adjustment tomorrow if needed. Okay, don't worry about Palantir or NVIDIA. Palantir is down a little bit today. NVIDIA is up a little bit today. I'm not sure why Palantir is down. I haven't seen the news that may be driving Palantir. Seems a little odd that it's out there as a kind of a contrarian today. It's been up, but now it's down. Good article a couple of days ago on it. I'm not seeing anything in terms of the latest articles as a justification for why Palantir would be down today. It's interesting that it's down a little bit today. It could reverse and go back up. Not too worried about that. NVIDIA up a little bit today, so we're actually back into profitable territory now on NVIDIA. And as we get a little bit closer to the earnings, we will add short calls back to the trade and probably do something like we're doing with Palantir right now, add a bear put spread to it. Microsoft big, huge earnings on Microsoft. We already talked about it. We're up almost 10%, and that's in the midst of losing almost all of the value on this put. Now, there's a couple of things that we can do with this long put. You could close it right now and take the 26 cents per share. That would not be a bad thing to do because there is still room for this part of the trade to get more profitable. And I am probably going to take this 420 strike short call and roll it out and up and increase the amount of profit we could get on the call side of the trade. But there would also be nothing wrong. We opened this Tuesday morning. There'd be nothing wrong with grabbing 8 or 9% on a 2-day trade and just getting out. That would not be a bad move in any way, shape, or form on Microsoft. I'm going to leave that up to you. I'm not going to tell you definitively this is what you should do, this is what you shouldn't do. I'm saying that just closing the whole thing right now and taking 8 or 9% profit would not be a bad thing at all. But if you want to get more out of this trade, and this is probably the way I am leaning, if you want to get more out of the trade, I am probably going to close the long put, take the 26 cents back in. I mean, everything is about money in, money out. Actually, it's 34 cents now because Microsoft's not up quite as high as it was. I am probably going to roll this short call out and up so that there is a bigger gap right here between the short and the long call strike prices, so that if the stock continues up and we get called away, we just get a lot more profitable. That's the direction I am leaning. I have not decided that for sure, but I will send something out. I will send out tonight whatever I am going to do for tomorrow morning's open. Or if I decide to do it during the day today, I will send it out and let you know as I'm doing it. I'll put it up both on Discord as well as on an email for everybody. Collar trades, we're good on the collar trades. No immediate adjustments need to be made right this second. We're gonna sit tight. I think Snap may fall a little bit more. I think they're up a little bit today, but I think they might fall a little bit more before we get into that week of our long put expiration. And they're bouncing back a little bit, but yesterday was not only a big move down, it was on heavy volume. This is a little bit of a dead cat bounce right here. That's all that is today. I wouldn't put too much weight in that. Let's see what happens to it tomorrow. And then, like I said, we've got another full week before we get into the week of expiration of our long puts there in the money. The rest of our collar trades are pretty set for right now. For those who follow us in the triple play trades, and by the way, if you don't follow the triple play trades currently, send me an email, send me an instant message. Let me know if it's something that you want to do. We make the triple play is the only thing we've ever done at Safe Option Strategies that is an additional cost to other members, to existing Safe Option Strategies members, and we do it because it is a joint venture with myself and 2 other people. For Safe Option Strategies members, we discount the triple play exactly to the tune of what my take would be on. So I personally am not making anything on it. It's the other 2 people involved with me that make some money on the triple play stuff. If you're not currently doing the triple play stuff, look at our track record, and we've got now Meta is doing fantastic. We'll probably close that trade today for our full target profit. Caterpillar and and I did close Google. Johnson & Johnson is the same trade as in the Signal newsletter, so we'll do the same thing that I just outlined with Johnson & Johnson for both those people in the triple play as well. There is a good chance that we are going to roll Caterpillar out 1 week because after a really good earnings report, Caterpillar is just not getting the kind of movement that we wanted, but it is trending absolutely in the right direction, and we just need it to get up to about right here. I don't know if it'll do that before the day is over tomorrow, so probably we either have to take a small loss on Caterpillar or adjust it out 1 week. I'm okay doing either one. I will make that decision and send that adjustment tonight. But if you're not following us in the triple play trades, look what you're missing out on. There's more trades. They're faster moving. We're up 70% on the year. And I think that's going to go up pretty dramatically when we get UPS. I think UPS will get profitable. I think Caterpillar will get profitable. And I think we'll get back a lot of what Johnson & Johnson is down right now. I think we'll get back. And that'll be closer to 100% on the year. Our spread trades, if you followed every single one of them since the first of the year, actually outperforming a little bit, but that is largely, maybe entirely, because of Palantir. So it's really on the backs of Palantir that we're doing so well on the spread trades. And technically speaking, that was opened last year. So if you're not in the triple play stuff, I didn't mean to turn this into a promotion for it, but if you're not in the triple play stuff, reach out to me with an instant message, reach out to me with an email. We make it really inexpensive for the Safe Option Strategies members, but it is more trades, faster moving, a little bit higher risk, higher reward. Last year we did over 300% return. I'm not exaggerating that. Over 300% return on our triple play trades for the year. And with us only being halfway through the second quarter, not even halfway through the second quarter, we're on pace to have something similar for this year on the triple play stuff. Because like I said, this is going to take a big jump to the upside with just a couple of these trades sort of getting back to break even or going profitable. All right. So anyways, that's what I have for today. I'm going to wrap up right there. I'll get this recording put online as quickly as I can. Watch for what I do with Johnson & Johnson. And then as far as the spread trade stuff goes, and then for the triple play members, like I said, UPS, I actually think we're going to be okay on. Caterpillar will probably adjust. Johnson & Johnson will roll out. Everything else looking fantastic. All right. Have a great rest of your day, everybody. I'll be back on live tomorrow morning, about half an hour after the market opens. Thanks. Bye-bye.